Welcome to Underwriting 5-Day Challenge. This is day one, and I am your presenter, Travis Dehart with Four Rings Real Estate. Let me go ahead and share my screen. So this is the spreadsheet that we will be using for the series of the 5-Day Challenge. And I've highlighted there are 6 pieces of information that we'll want to get from the marketing package that we receive or from online, whether we're just looking at a property through a website or we're talking to a broker or someone else in relation to this property. We're going to ask for or look for the asking price, number of units, the gross potential rent, what the vacancy rate is, what the total expenses are, and what the cap rate is. And then after, so right here, you would enter everything into this marketing package one, and it'll give you a fair market value of what the property should actually be valued at. And after you find that out, we're going to come over here to the second column, my version, and we're going to play around with just a couple of items. We're going to take a look if it's necessary. We're going to first look to see, should we modify the vacancy rate and should we modify the expenses? If we do need to modify either of those, we're going to come down here and look and see, has that made a difference in the valuation of the property? And if it's significantly lower than the asking price, then need to find out, is there any wiggle room? Is there any negotiating that can happen? Or if it's vice versa, if we come up with our valuation and it's much higher than what the asking price is, you definitely know, dig in deeper. So that's a quick overview of what we're about to go through. In addition to one other item we'll be covering in this video, we'll be comparing the average market rent based on what we were told and what the current actual market rent is at the moment. And if we're able to increase the rents or not increase the rents, we'll have a tremendous difference in what our offer price will be and what upsides we're going to be able to have from the property. So thank you for watching. Let's dig in.
Are you able to hear me?
Yes. Yeah. You able to hear me?
Yep. What's going on?
All right. Uh, Nothing much. Really excited to dive into this. It's definitely a topic that scares a lot of people.
Man,
And
it really do. It really do. Let me see. Let me get yeah. What's going on, brother?
yeah, just trying to put out fires. It's a term that me and another investor friend use a lot. Is it seems like we're almost like firefighters.
Man, yeah. I definitely get it, man. This definitely one of those topics, man. Especially underwriting, man. That's like the most important thing to me right now, man.
Hmm.
Is really understanding the numbers, man. And I haven't been able to do much 'cause I just got back from vacation. I've been on vacation, went on a retreat. So I haven't been able to look in that folder, but I did see there was more so about the videos, which I use Michael Blunt tools, and
Nice,
I done went through a lot. I done went through all his videos, so I
nice,
do got that basics of it. I didn't get a
nice.
chance to look at the I didn't get a chance to look at the video for the 26 unit, man, but I definitely like to start wherever.
Okay. Yeah, no, that's good. Yeah, we're gonna go over that 26 unit evaluation. He starts out with doing a 10-minute evaluation, and so that's what we're gonna be running today. And I guess so. Each of these 5 days of the 5-day challenge, I'd like to. I'm gonna have it recorded and be able to share it to other people to offer this, knowledge to others. And so, would you like to take a moment to introduce yourself to anybody else that's watching?
Yes. How everybody doing? My name is Dominique Williams of Harvest Season Investment Group. Like I said, just came off a vacation, was on a spiritual retreat with some of my spiritual leaders just to get my mind right. And I know that's super important in business. We have a lot of people that's in business that don't take the time to give, honor to the Lord, and that's the most important piece of everything that we're doing. And that's really how our business and stuff flourish. So I gotta always give that time and give him my time first. So like I said, I've been in real estate for I started looking into real estate the end of 2020. Did a few wholesale deals in 2021. Around August of 2021, I quickly realized I wanted to focus on multifamily apartments. Really didn't get serious until the beginning of 2022. Moved to Charlotte, North Carolina. Look for deals all of 2022, and I just recently closed with some more partners on 236 units in Atlanta, Georgia, and
Nice.
looking for more deals.
Congratulations.
I appreciate it. I appreciate it. And yeah, that's where I'm at now. Really want to sharpen my underwriting skills. I more focus more on the capital raising side and investor relations and all things social media. So
Oh, yeah.
um, really want to sharpen that underwriting piece, and I know that that'll be able to take us a whole lot further. So yeah,
Oh,
that's
yeah.
my story.
Oh, that's awesome. Yeah. For anybody that doesn't know about me, uh, similar story, where got into it and then I ended up stopping for a period of time, and I've done several deals with other partners and investors with syndications, and there was a point where, for me personally, I decided to go the route of doing my own deals without getting into doing more of the syndications. And so we ended up acquiring our first investment property where there's no investors or partners. And that happened just exactly 1 year ago. So we're excited, just celebrated 1 year. It's a value add property. And this week, a contractor's going to be starting on it to build an ADU, so that it'll just maximize that monthly cash flow on it. So it's super exciting. And I wanted to kind of go over a few different opportunities that knowing how to underwrite deals will bring for you. Uh, One, obviously you'll be able to underwrite your own deals, but you can also uh, take advantage of. I've seen many times people actually post in different groups about, they don't know how to underwrite deals. And so they're actually advertising, offering to pay somebody else to underwrite the deals for them. So you can actually profit off of that, just having that knowledge by, someone paying for you. And then there's another way that I could see with it is, if you know how to underwrite deals, you can actually get paid a finder's fee if you're able to bring good deals to other investors. And that right there is a really nice, easy, fast way. I see a lot of times, people advertise saying, "Hey, I'll pay, you know, $15,000. I'll pay 1%." So that they structure it differently. But if you know how to underwrite deals, you can actually do it where you don't even have the intent to buy it or to make any offers. If you run the numbers and say, "Hey, this actually is a really good deal," you can actually present it to other investors and get paid. So I guess with that, we can go ahead and jump on in. Um, so so if you already have the Michael Blanc's underwriter, I went ahead and downloaded the most recent version of it. And do you have the most recent, or do you need to download that?
Yeah, I might need the most recent. How recent is it?
Uh, I don't know when he put it out, but I did notice that when I went to check on it, part of, paying for it, you get those free updates, and I noticed that it was newer than the latest that I had. So I went ahead and downloaded that, and so the one that I have that's shared in the folder is the most recent that's available.
I look at that while you pulling up and doing your thing. I'll be pulling it up then.
All
I
right.
think I have it because I usually go in there and update it and put the new one on my if it's just recent as this year, I probably already have it, but I definitely go in there and
Okay.
grab it right while you're doing your thing.
Nice. All right. So I'm going to share my screen. Let's see. All right. Are you able to see this apartment deal on my screen?
Yep.
All right. So this right here is certain deal that Michael Blanc was just going over. It's a 26 unit apartment complex. And so basically what we're going to do is just kind of do an initial 10-minute analysis on it, and just kind of follow along, plug in, same type of information that Michael did, and just kind of see like, hey, do we come out with the same evaluation that he came out with, and kind of just playing around with the numbers, of to kind of see what changes when you do that. And so first, this right here's the analyzer, and everybody seems to have their own analyzer. Every group you go to, that everybody's got their own analyzer. I think I've got at least a dozen or more different analyzers, and so there if you're able to understand, what information you would want to kind of pull from, each deal, uh, you're able to use any of them. Um, some, are better than others, but this right here, the Michael Blanc one, is one that came highly recommended. I've, tried out a lot of other ones. I do really like this one. It really has a lot of punch to it. Um, so So right here under the scenarios tab, uh, what I like about it is you can have right here, your marketing package is the column that has all the information you want to plug in, uh, that's advertised to you. So all the information that is known. So there are these other tabs or the columns over here where you could plug in your own information and just kind of verify. One of the ways is verify, is the information from that marketing package, from what you're told, is that accurate? Even if it is accurate, uh, it'll show you maybe you need to offer a different price. Maybe they're asking for too much, and so that's where these columns come into play. And so with this particular deal, what we're going to do is just run through the different numbers that Michael had gone through on this particular package. And I've written down, what some of those key pieces of information are, so we can go ahead and just start plugging those in. And so one of the key pieces of information, definitely, is the asking price. And so with that, on this particular project, the asking price. So if I plug in this asking price of almost $1.7 million, you can see it already starts to formulate a lot of other information for you. So we're gonna, after we get the asking price, then we're gonna go in here and tell it how many units. So this right here is a 26 unit. And then you can see right here, it automatically knows how to calculate the price per unit. For the gross potential rent, it shows, or on Michael's evaluation from his marketing package, it said that that was $248,820. And yeah, you can see again right here, that's the average monthly rent that you would see. It's almost $800. This right here is a really good feature. I'm glad that he added this into the spreadsheet, because where he had a lot of his training videos, this wasn't added in. So he was having to manually do that on the side. So seeing that he added it in is amazing. Um, and we're going to reevaluate that in just a moment, because we're actually going to be able to verify if this number is too high or too low. Then also from Michael's marketing package that he received for this particular deal, they had 7% vacancy. And I'm just going to look at his video just to see what that vacancy rate was. Vacancy 7, so 17,417. Okay, that's a positive. That needs to be a negative. There we go. So you can see here, that's 7%. Okay, and then if you come down here, another key item that you want to look for is the expenses. So far, what we've looked for is the asking price, how many units, um, what the gross potential rent is, and right now we're going to be looking at what the total expenses are. And so on this particular deal, what was provided in the package is $76,807.
Are you do you got a
Okay.
OM? Do you got the OM over there pulled up or something?
No, yeah, just on the video, because unfortunately he made this training where he has the marketing package pulled up, but he didn't provide the marketing package for this.
Okay,
So I'm just going off of his sharing his screen basically, but I don't have anything that I can open up myself.
okay, cool, cool.
And so the next thing that we need to plug in is it has an advertised cap rate of 9.1. And so if we come right here, 9.1 and enter the cap rate, you'll see right here underneath of it, fair market value. And it's based on the net operating income. So that actually lowered just slightly. And so the asking price is 1695, and it says right here that the fair market value is 1698. Now, some of the things that we want to look at as a next step with our analysis, still just doing a quick analysis, is this right here, the total expenses. They have it right now at 33%, which is very low. There's kind of a going rule of thumb where you want to plug in at least 50% for expenses. And so what we're going to do is we've entered in the information that was provided from the marketing package in this column one. And now what we're going to do is in this column two, we're going to just kind of do our own evaluation. So let's just say, we're going to keep the asking price, still the same amount of units. What we're going to do is right here, instead of a 7% vacancy, what we're going to do is we're going to modify that slightly. So instead of 7%, we're going to make it maybe 10%. Because if you think about, even if you have 100 units and you have just one unit that you have to turn over that you miss a month's rent. If we just say 5% for vacancy and then another 5% for, loss of lease, somebody that isn't paying you, maybe they're behind. So right there, we're just going to split that. So that right there, you'll notice that that affected our effective gross income. Um, and so we're going to come down here as well. And part of our projection is here's that 50% that I was talking about. And you can see a difference of our net operating income, where they're saying that the net operating income is $155,000 a year, versus our projections of $111,000 per year. So significant difference right there. And if we come down here, you could see that based on those two numbers changing, just saying, hey, I feel like you're not adding in all of your expenses. And, I kind of feel like just if you want to even equate for one turnover a year, which would be a very safe thing to do, especially on even on a 100 unit building, that right there is it's very reasonable to say, hey, we're going to have at least that. So just making those two differences, two changes, you'll see here it says that this property is no longer worth 1.7 million, but now it's dropped to, hey, it's only worth 1.2 million. So that's a pretty significant difference. Okay, so basically what we've just done, just doing a quick analysis of looking at just the asking price, how many units, what the gross potential rent is, what the expenses are, and what the cap rate is. We were able to determine that they're asking for a whole lot more than what the property is actually valued at. So we definitely wouldn't want to have our asking or our offer price to be that high. Our offer price would be more down here. And a couple of the different things that we would want to, throw out there if we decided to put an offer on this property is, we could talk to the broker or the agent or the seller and say, based on my experience when I've looked at other properties in the area, they're at 50% expense rate. And now my NOI is no longer 155,000, but 112,000. And if we still apply your cap rate of 9.1%, the valuation I'm getting, it's really 1.2 million. You're asking 1.7 million. That's a significant gap. What's flexibility is there with the buyer? And so this right here would be your offer. And a couple of things that you can do to verify some of the information that's here. So you can see here, the average monthly rent is $798. And so if you have a Renometer account, you can actually verify this. The property address that we're evaluating here is this 7519 Lane Street in Baltimore, Maryland. And for this particular project, these are 2 bedrooms. So if we just plug those in, say analyze, so here you can see the average is right around 1352 $1,400 dollars per month for that type of property. At the recording of the video that Michael Blanc did, this was way lower. It was actually right there line with this 798 mark. So you can definitely see, I don't know how long it's been since that video was recorded, but you can see it's definitely changed significantly. And so if you say, look at this and say, wow, I feel like I could actually get $1,400 a month for this property. Instead of that, you can actually take this one step farther. So if we came over here, so this right here is our offer package, and we saw that 1230 429 it should actually be what we're going to be offering. Let's plug that in here to our offer for the price. So 1230 429. So what was that? 1230 429. 1230 429. Okay. And so if everything else remains the same, we can come down here, see still cap rate 9.1. Then shows right here, 1162 is where we should start with our asking price. If we come over here to the summary tab, and we change this to looking at the scenario number 4, all of this calculates based on our offer now. And you can see here, asking price versus purchase price. And this right here, the summary tab, is where you'll be able to see what type of returns you'd be getting or your investors will be getting. So currently, as it is, your average annual return would be 9.89. And you can definitely play with all these numbers. That'll be for another one of our next sessions. But right now, what we were going to do is just kind of play around with that rent number that we're able to get. So now that we've changed the summary tab to look to calculate all of these based on that number, our offer, if we go back over here to the P&L tab, if we change these to be what that, what is it? Let's just say $1,400 will be the rent. Um, Let me see. Uh,
So I was a little confused right there. What was you trying to get to be able to put in?
yeah, so right here it shows the average monthly rent, and so the average monthly rent based on that marketing package, that's the number that they gave us, was $248,820 uh, a year according to the marketing package right here for that deal,
Mm-hmm.
gross scheduled income. So they're making that much money off of that property. And so if you said right here, 248 $820 is how much they collected for all 26 units for that year. If they collected this much, and you say divided by 26 units, so every month they're bringing in $9,500. And so now if you say divided by 12 for months in a year, that means that every unit is the average per unit is $797 that this property is bringing in.
Mm-hmm.
And so now that we know like how much each of those units, the average is, from our evaluation looking at Renometer, it should actually be 1,400. And so if we just over here under our offer, if we increase that gross potential rent to being 430,000, uh, opposed to the 248, since this package was evaluated a long time ago, not knowing how long. Um, let's see. Now
So
let's see.
you
What's
put
that?
430, you put 430,000 there.
hmm Yeah, and you can see that right here, the average monthly rent, 1378, which that right there's that aligns with what we're seeing as current rent for that area. So that's what we were trying to do, is get this average monthly rent to reflect what current conditions are for that area. And so now that we have that, we can come down here and see what our offer, what the property would be uh, valued at based on that 9.1 cap rate. And it looks like 2 point, yeah, just over $2 million is. So you can see the big difference in when that video was recorded.
We gotta,
And
we gotta. Hey, look, we'll jump right on their offering price off the gate.
right, yeah.
If it was that time right now,
Yeah.
what 1.6? Hey, let's go ahead and put an LOI in. Matter of
Yeah.
fact, just to be sure, we'll put in 1.8.
Yeah.
We'll do it 1.8.
Yeah.
We
And you
put in
could,
an extra, just make sure so we can win the deal.
yeah. Yeah, and so that's how you kind of do like a quick analysis. Is just running through those, 5 or 6 different numbers on what you're able to get from, you know, online or, from a marketing package, OM. Um, you can look at here and just kind of quickly gauge and say, oh, you're asking for 1.7, but, based on, I really feel like your numbers are low on how much, the expenses are. Uh, just using a rule of thumb of the 50%, we really need to make our offer lower. But then if you wanted to dive deeper, if you sent out an offer, maybe there was some negotiating, you can then, that's another place to look at is, hey, let me actually verify the market rents for that area, because we were able to see here that significant difference in when this deal was recorded versus what it is now. It made a huge difference. And if you come over here to the P&L tab, you can see that that was updated average monthly rent. Uh, yeah, the numbers are significantly different. It changes the picture entirely. And, that's not to say that that's going to happen on every deal, but that would be the next thing you would look at is just verifying what those market rents are to see, hey, is there any flexibility with being able to bump these rents up or not? And on this particular deal that Michael went through, there wasn't any room for that value add. The owner had gone through and already done significant upgrades to the property at that time. So that's how you would do the initial 10-minute offer, just kind of see like, hey, are they in the ballpark, or, is it worth my time? Is there any flexibility that could come from it? Or, man, this is a rock star deal out the gate. Let me jump on it. So that would be the first thing that you would do. So how are you with the first part that we did?
Yeah, I like that.
Okay.
Um, yeah, I like that. To be able, see something different. Somebody different, how someone underwrite differently as well.
hmm Yeah,
Uh,
and just to, recap the numbers that we looked at to even be able to see like, hey, is how close is that, based on what it's worth. Um, we looked at what the asking price is, and I'll go ahead and just highlight these. We looked at what the unit count was. We came down here and we plugged in what the gross potential rent was, what the vacancy is. Sometimes you'll see properties that say vacancy 100% occupancy at all times. And you can't have, 100% all the time. There's got to be some turnover at some point. So that's where we came in here with ours and just plug those in. So, that we know like, hey, it's going to happen. Let's go ahead and be prepared for it. Um, and so we, plugged in the vacancy, and then we came out down here to the total expenses and plugged that in. And that's where we saw that, hey, this percentage, this is lower by a significant amount from the 50% rule of thumb. Um, and yeah, so let me go ahead and highlight that. And then we entered in the market cap rate. And in a future session, we'll go over also the cap rates. But for this one, this right here was really what we were looking for, is to say, okay, this is what they're asking, but this right here is really what our offer price should be, is around this area. So then we took that number right there and we plugged it up into here, into the, the purchase category. And then just looking over the numbers, and it shows for that cap rate, this right here, plugging in the higher rent, this right here is where we see that, yeah, definitely, uh, this will be a deal worth looking farther into.
all right, scroll back up. I want to highlight the ones that you highlighted, which I already did. Okay, I just wanted to get the one that was in offer. Okay,
Okay.
yep, 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 yep.
Just practice, just repetition with this. It's going to make a big difference. Definitely this is a topic that scares a lot of people, but if you come in here, even just with this 5-day challenge, just coming in here and just plugging in, just the repetition of plugging in the asking price, number of units, gross potential rent, vacancy, the expenses and the cap rate, that right there, that's a huge stepping stone. So if you're comfortable with looking at those numbers, and when you're looking at a deal, kind of being like, okay, these are the initial ones that I need to look for, you'll be able to come in here and just get faster and faster, and you'll be a lot more confident and help build that confidence for you too. So, but yeah, no, I appreciate you with you joining today, and I'm excited to, see how much knowledge we're able to gain over these next 4 days. I appreciate you.
Yeah, man. I appreciate you too, man. Good call.